I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Jill Malandrino with The Street, and together we bring you the morning call. Wednesday's session was relatively lackluster, but we got some fuel to the fire of the upside momentum after Bernanke made some comments after the close. Our futures clearly responding, and global markets as well.
Yes, it was a little tough to figure out how to place yourself overnight because we've had such a big rally from the lows. But overall, Big Ben came out. He assured the fact that easy money is not going to go away. They're going to stay the course. And then if you look around the world, Europe up 1%. China tacked on another 3% to the 2% it already tacked on when they started to raise their hopes that the PBOC will be on their side. And then Japan still trickling along 6 weeks already to the upside after that 21% move off the lows, showing you, there's still vastly, amounts of opportunities out there.
Right, and it's just when do you get involved? There's a lot of frustrated shorts out there. There's a lot of frustrated people who are uninvolved. We don't have much on the calendar today. We have jobless claims at 8:30 and some crude levels to look at. But we're really going to kick into high gear with earnings tomorrow with JP Morgan and Wells Fargo. So what we want to do now is take a look at the S&P and see some spots we should be aware of.
Well, what's sort of frustrating is that you've had tactical spots to get involved, and then we've had nice follow-through moves, and then when you think the market should digest, it just doesn't.
Right.
So it's almost like you just have to be involved, you have to stay involved until something changes, and nothing's really changed since the lows. Leaders have been acting well, the Russell's been leading the way, world markets are staying intact. So, if for guys that trim and trail, sometimes, you trim and trail yourself out of really good positions. And if you look here at the chart of the S&P, you will see there were some nice calculated spots that you could have put on some size. One of them, obviously this was your outside day, that May 22nd, time to take risk off, maybe get short. Here was your follow-through downside when it went through the 50-day. Then everyone who was looking for a reversal, you didn't know if it would get to the 100-day, the 200-day. Well, you know what? It held the 100-day, so this was your entry back in. Okay, then you had the move to, to the resistance point, which a lot of people said, oh, you know what, it's only second quarter window dressing. But you know what? It proved it wasn't because it digested sideways. So if you waited for the digestion, this was your day to get back involved, and we closed above the 50-day moving average. I really wish that IBD on this day would have went back to a confirmed rally, but that's not their system. But anyway, from there, 4 up days. So yesterday made some sense. Take some risk off. A little doji right here. We're near highs. Were we strong enough to make new highs? Well, anyway, with that said, I know for me, I'm coming in pretty neutral to light, and I feel a little bit frustrated that we're going to be opening up here near all-time highs, considering my thesis has been that we're going to make new highs
right.
on the year. It's just happening at a speed that's a little bit too quick for some guys that are a little risk averse to just get involved with that, with a certain process.
Well, speaking of momentum, we're going to take a look at the retail group in the sector spotlight. Let's look at the XRT, which is a retail ETF. It's up 25% on the year. Today's same-store sales, and not every company reports monthly metrics anymore, but you will get some derivative plays off the companies that do. June expectations are expected to be the best since January, and we got that warm weather push at the end of June, so it looks like that 4th week is really what's going to pull those numbers up.
Yeah, and it seems like this has already been leading the way, so when you have those expectations so high, people just have to be a little careful that
right.
if they do respond well to them, it might be the time to, trim and trail some. And if you look at the chart of the XRT, which we've talked about a lot here, look where the 100-day is on the XRT. S&P went down to it, this didn't, so that showed relative strength. That's why it had such a powerful move, and now we're here above recent highs. So this group is already in motion, so just make sure when you look at certain names, they're not too extended and you know your time frame.
Moving along to Gap, and this has been a real surprise. I was wrong on this one in the beginning of the year, but what this company has done is it's improved its trends across every metric, across every business line. In fact, on my site, Options Profits, I have a weekly calendar spread on this particular one just for the same store sales print. So I want to see how that reacts. It's been a nice surprise. We've been adding in the Action Alerts Plus portfolio with Stephanie and Jim. There's a lot of momentum behind this name.
Yes, and this name is already at 2013 highs, and the trends have been there. So it's good. If you're wrong on a name, you could always change and not just be frustrated and go against it. So there was multiple times to say, you know what, I didn't like Gap, now I do. And if you look at the chart here, look at the trend it's been. Look at this long-term trend besides this sort of breakout right here, besides this elevated trend, which has followed the 21-day all the way into these highs. So with that said, it is 4 or 5 days through the high, extended from all the moving averages. So it's hard to say I'm just going to buy Gap up here, but just realize, next time around, look for these type of patterns in, fundamentally sound names, especially when they revamp themselves like they've done, at the Gap with Banana Republic and all those, stores.
Right. Well, they're getting some help from Banana Republic because a lot of my dresses come from there for work. Moving along to TJX, I like this one as well. This is certainly a value creation name. It's been a really great outperformer in the group, and the chart and the fundamentals confirm that for us.
Yes, and this one's not as extended. It's right at high, so it's breaking above it. So it seems like there's still opportunities. Sometimes you have really strong names that have opportunities and setups to get involved, and sometimes they're just, past the point and you missed it. So you don't want to chase it. But this one, you look at the chart here, it looks like, we've obviously spoken about TJ Maxx a lot. This was one entry, and then here was another, but it's just starting to get above this prior high. So if strength continues, there's no reason why this can't. So this isn't as extended as some other names. So there might be some opportunity there. So this one still looks strong, and as long as it stays above 52-ish, stay with that.
Moving along to Costco, another value creator here. This is one of those big box names that continues to improve and innovate across all business lines.
Yeah, and this one too. It's just like the more we go through these names,
right.
it's like it boils, me, because there are times when it's tight and you could buy them, and times when it's up 5-6 days and you're like, okay, I just got to hold them and not sell them too early.
Right.
And you look at Costco, you'll see, it just had one of those price points. Okay, it just went through another area of resistance, and it's not been very powerful. So there's still some opportunity here. If these retailers continue to make new highs, I guess there's no reason why at some point this gets through 116. It's above the moving averages. It's in the game. Remember we quickly talked about Target. I just want to show this also. Here's your time to buy it. That's when it's in motion. And even Walmart, I remember at the lows here, I'm like, if you wanted Walmart exposure, here it was. And this is right when I reclaimed the 200-day. And this, this, to put an eye on. If the longer it stays above 76, the higher percentage we can get a trade above 77.44 to potentially make new highs in a year.
All right, well, that's wrapping up retail for you. We're going to jump into a quick commercial break, and when we come back, we dive into the trenches.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our 2 very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
Welcome back to the Morning Call. We're going to dive into the trenches and look at some macro themes, kicking it off with TBT. This is an asset class where there's been a lot of movement. TBT up about 1.5% yesterday.
Yes, well, this is a way to play higher rates, and this is something that I've been, getting in, getting out. It's been trending today. It's going to be interesting because with Big Ben saying that it's going to be easy money, rates are coming down a little bit, which is why the market's up. So if you look at the chart of the TBT, we've said a few things. First of all, we've talked about putting this in your drawer for a 6 to 18 month move because it'll help you if rates do go higher. Yesterday, short term still looked good. Remember the big gap from the jobs Friday? Well, it's opening lower. So if you have a little bit of TBTs on, which I do, just know your time frame. Know whether you could just sit in it for a while, because I do think over time it's going to head higher once we start getting some more economic positive data. This is going to be right back in that trend. But here you are. Here's your 21-day. Actually, this is your 8-day moving average. The 21-day has been support this entire time. So, you might on a short-term level have to take a little bit of pain today. If you don't want to deal with it, just maybe hit it out and wait for it to establish a new pivot. Or if it's in your drawer, just leave it there, because I still think that within 6 to 18 months rates will be higher. They just might take a few days to sort out yesterday's big speech.
Moving along to GLD, the gold ETF. This one whipped around after the Fed minutes yesterday, and then of course after the close with Bernanke making some comments. So GLD is one you're definitely going to want to keep on your radar. You might see some nice tradable events in that one too.
Yeah, and if you approach these technically, there's always opportunities. Like we've talked about the 4 inflection points in gold, where if you had no opinions, you didn't have to suffer the downdraft.
Right.
You look at the chart here of GLD, you'll see this was that pennant that we were talking about around 161 when we didn't know which way it would go, but it resolved to the downside. So as an intermediate trader, we're like, that's when you get rid of some or you sell, which is like 161. Then it hovered on this macro support. You know, for a while, you could actually look at the weekly chart, and you'll see that it's pretty apparent that this was your macro support. That, you know, if you wanted to not hold for more pain, this was your exit. And then here you came down again, and then it broke lower. So down here, you know, we were talking that day on Morning Call about the blood on the street in gold.
Right.
So Jill, we talked about, you know, silver. I was with Brittany, but I'm like, silver, I'm like, I think it's a better buy at 17.5 to 18.5, and gold between 113 and the GLD, 113 and 118. At least cover if you don't want to be long. So if you go back to the GLD, you'll see that here is that lower area. Okay, and this was that last capitulation move. Whenever you see a huge red bar followed by a green bar, that can give you a potential reversal. You know, here it was a little tricky because of the gap down, but it was a gap down and closed on the highs, and then all of a sudden backward resistance. So overall, I think there were signs to cover short term, maybe not the most blaring signs to be long. And at this point, 124.09 will be a little resistance in, you know, in this area, and then perhaps at some point it maybe fills this last gap. But overall, I think there's better places to be, and if you're long a little gold overnight, congratulations, you had a nice trade.
We'll take a look at SLV as well, but one thing I want to remind traders is that gold and silver, especially these hard commodities, the underlyings trade way different than the ETFs and the related stocks do. So sometimes when you get these huge moves in the underlyings and the ETFs don't respond, whether it's in line or not in line, you just have to remember that the underlyings are, at the end of the day, is really what's going to drive this. You have to be careful that you don't trade them like stocks. If you look at the SLV, it's down, we said this on Monday, it's down about 0.3% on the year, but the base metal is down 40%. So they're not as correlative as people think, and I think it's important to be aware of that.
Right, and just the problem is that not everyone can go to buy a bar of silver or gold, so they look for some type of exposure. And with silver, that's something that we focused on a little bit more because it was easier to grab your hands around. This too, also, 3 different areas to get out, and if you got out and you took advantage of the blood on the street in the metals, and you said, I'm going to give it to that low, you know, you're getting paid this morning. Look at the chart of SLV. You'll see here was one exit point, here was another exit point, and then all the way down to where we were. And if you look here, okay, I know for me, you know, I caught a decent trade when it went above this 1830, but I was also long here into this gap down that I said I'm not going to deal with. You know, but if you were a swing trader and said, you know what, I'm going to give it to the low from that Thursday, you were still there. And then here you are, you have this downtrend that you're opening above. 1936 is going to be a little resistance, but then overall, it could fill this gap up to about 20. So if you're in it still, congratulations, you caught yourself a nice trade. I would trim and trail it. And if you're looking to just short it because it's up, you know, I'd give it some space as there's a big gap here that can get filled.
All right, moving along to quick hits for quick cash. We're going to kick it off with Tesla. This is the new Steve Jobs, is what everyone seems to be saying, and the stock price seems to agree.
Yes, and I still feel 140, 160 is doable. It's just a matter of your entries and exits and time frame. You look real quickly at Tesla, you'll see, you know, all in all, lots of nice action here. It's been following the 21-day all the way up. Started to break out well before the market started acting positive. This was one of the signs to show the market power. Here was an entry around 110, another one around 114. Here around 125, it's hard, okay, because it is extended from the moving averages. There's no clear-cut setup, but if you're in it and you're holding it, you know, you found yourself a nice position, a nice winner over the course of the past 2 years, and now it's going to be in the NASDAQ 100. So just don't put short in your brain with Tesla because the wheels on this vehicle looks like it's going forward, not backwards.
Well, the one thing that we always talk about when it comes to technology and the market overall is that hunt for innovation. Where is it coming from? That's why when he's so correlated to Steve Jobs, if you will, the stock price is responding, which is why Costco's done well, even though it's a totally different sector, because it continued to innovate, even though it's a big box. Innovation is the key. And if you can fit that into your model, if that's what you're known for, it's going to be rewarding. Anyway, speaking of innovation, let's go back and take a look at Apple, because we're always involved with this one as well.
Yeah, and unfortunately, they're not really innovating so much, or nothing has come out so much yet. But there seems like there's another trade here. You know, we've talked about Apple recently, ever since it put that little red dog reversal in at 393. You look here at the chart, okay, you will see that, you know, here is that potential double bottom that we were talking about. Okay, this was your entry at 393. Here was your nice gap up for follow through. You had your 3-day move that put it on the map. And then now it's, you know, hovering higher. Okay, at this particular point, there's really, you know, a bigger resistance area that comes in here. And, you know, I do still think that there's a chance that it could hit the 50-day before earnings. You know, but this stock has been so battered and bruised, you know, since the highs here, so many different ways to get out of it. You know, this when it broke support right there. Here was another area when it broke this trend line. So overall, it's been down, you know, just been in a crazy downtrend. But with that said, there's been some tradable bounces, but they've all failed. So the question is this bottom formation enough to finally get a sustained move back to potentially the 200-day? So I think for guys out there, you got to take it, you know, very micro, because that's been the way to approach it. Anyway, with that said, if it gets above 424.80 in the next session or so and closes above it, I would think that you can get the 50-day, which is 433.
All right. Again, going back to innovation, let's take a look at Netflix. It's just not a DVD by mail company anymore.
No, they've reinvented themselves, and they've had a nice technical short squeeze going on. They've had some influencers involved, like Carl Icahn.
Right.
He's made a ton of money in this thing. And my traders probably trade this every other day because there's been nice setups. The last setup was due on Monday, and actually Mark Sperling had his first play of the week, which wound up paying off pretty well. If you look here, this was the, you know, the formation. You know, it was this tight formation coming into a downtrend. Right around 227 was a buy price. 235 was a buy price, and now here we are, probably at his, 2013 highs. In our education classes, we talk about the power of gaps, and look at the size of this gap that got, had commitment to it. Okay, then a bull flag, which is another tactical chart pattern, into a downtrend. That's when you take notice. Now the question is, can it get above 247.41 and stay above it to add some momentum to what has already been a really nice momentum move this year?
Yeah, that was a great write-up. In fact, I subscribed to that on Friday when you guys made the announcement. And for those of you who haven't yet, just search Mark Sperling's name in Twitter, and you'll be able to find the link if you go through his tweets. Take the time to do it. It's free, and it's clearly well worth it. Moving along to Amazon, another one that is just, new highs, continue to beget new highs. It's the strongest retailer out there, and it has the ability to control prices.
Right, and this one, during the correction, I sent the chart out on Twitter. I talked about it many times, saying this should be for one of the first high beta names to make not only 2013 highs, but historic highs. Even though the PE is high and everyone fundamentally says it shouldn't be up here, you know what, Trump, price trumps thoughts.
Right.
But anyway, you look here, the two tactical spots were right here. This was one of them at 272, went across this area. We talked about it in the morning call a few times, and then when it closed above this 285. And at this point, if you're still in it, you know what, I think it's opening at 295. It's probably on its road to being plus 300. And if it gets above 300 before earnings, just make sure you trim and trail and know your time frame if you want to be involved for earnings. But the last few earnings reports haven't been great, and it's had and they've given it a pass to the upside. Right. Imagine if they actually have a good report. I would just be out of the way and not be a short in this, but know your time frame if you want to stay long.
Right. Moving along to Triple D, this is a newer one for us, but I like this a lot. It's not just about printing. They're involved in aerospace, autos, medical devices. Remember when Apple introduced the tablet, how the medical device world went crazy? Everyone has a tablet now. I think this could be something like that, and the price action seems to agree.
Yeah, and this is a group that we've talked about for the past year. Steve LeVay, Mike Lee, they're all over these three names. It's SSYS, Triple D, XONE. This Triple D actually has a nice setup. It's probably opening up above it, but I still think today you could focus on it. Look at Triple D. You'll see this downtrend right here. You'll see nice tight pattern. And a move above 48.5, which is probably opening above, should take it well through and north of 50. Real quickly, you look at SSYS. This too, has been a name that for the past few years have been rewarding people for sticking to this trend. Unfortunately, it's just real funny. Like, there's so many sites out there that I'm not going to talk about that are always on the glass half empty. Oh, this sector's not for real. Oh, this is, it's going to be a fad. And meanwhile, they're making strides into the real, manufacturing world. And if you stuck with this and you educated yourself, you could have not only traded it well, you could have held on probably.
And had a nice long-term investment.
Yeah, which is what a lot of new issues turn out to be. Just like last one, XONE, which, from the new issue price all the way up here, what a move. And, the last few sessions, we talked about a little cute short too, so you could also tactically make money. But overall, this has been a long, almost a triple since its IPO, and that's not even a year old.
Look, tactically is the way that you have to trade this market, because charts, fundamentals, what you think is going to happen is really not what has been playing out. Just like we spoke about the ags on Monday, we're tactically trading around them and their seasonal patterns, and it worked out really well for us this week. Let's wrap it up with the biotech, CELG, and again, that word innovation. It looks to create and change the way drugs are made for this particular industry. They have over 300 clinical trials going.
Yeah, and it's been responding. The last few days while the market was, just hanging out, or yesterday, so to speak,
right.
The bios and the pharma were on the move, and CELG is one of those leaders. And you look at the chart, I think Sperling owns it, he might not, but right above 125, the next point of reference is right here around 130, 182. Just want to point out AMZN also, which started to act better. This, had a nice engulfing day yesterday. So for something that's not extended, because there's so many extended things, here's day one. So this looks like it could have a move probably back to this area. So look at AMZN again also. Maybe if it's not gapped up too much, there's opportunity there today.
All right, guys, it's about to get fun as we get into earnings in high gear tomorrow with JP Morgan and Wells Fargo. Then we have another 4 or 5 weeks of some nice trading coming up. Catch Scott at the end of the day as he wraps up the charts for us on Real Money Pro, Options Profits, and T3Live.com.